Quadruple witching days are known for volumes and volatility, but history suggests they may not be as spooky as they sound. Quad witching is the final trading day before 4 kinds of futures and options contracts expire. It occurs 4 times a year, and it can lead to increased volumes and volatilities as traders buy or sell shares to offset expiring positions. But don't let the ominous sounding name fool you. On quad witching days since 2002, markets have actually moved higher on average. All S&P 500 sectors are typically positive on the day, and volatility as measured by the VIX index has typically traded lower the majority of the time. Something else to keep in mind, not all witching days are equal. History shows that market forces have been most volatile on quad witch in March. It's essentially a coin toss whether or not you would make any money in the S&P 500. Half the time it trades positive and half the time it trades negative. September and December quad witch, however, tend to be more bullish from a seasonal perspective. Stocks have historically moved higher on the date 70% of the time and seen better average returns. 1 week after quad witching days is when you might want to be careful. Historically, volatility has risen and stocks have fallen. All S&P 500 sectors trade lower, with financials and industrials the worst hit. So although witching hour may be upon us once again, history shows that investors may not need to fear.
What's going on, YouTube? Are you ready for Freaky Friday tomorrow, or also known as Quadruple Witching Day? Well, I am. Tomorrow between 3 and 4 p.m. Eastern on the third Friday of every March, June, September, and December, we have 4 different kind of securities that we need to address, and that's the stock market index futures, stock market index options, stock options, and also the single stock futures also expire. And these expirations generally increase the trading volumes of options, futures, and underlying stocks, and occasionally increase volatility of prices of related securities. So we all know the GME and AMC are shorted. We don't know how much, but we do know that tomorrow will be volatile. In that video, it says March is the most volatile month out of the 4. So that excites me, because the stocks that are most volatile or the most thought after is GME and AMC. So one of the things that I wanted to clear up, a lot of people get on RobinHood for the January shutting down the trading for buying those stocks. But, you know, I'm a TD Ameritrade customer, and a little disappointed I wasn't involved in these stocks in that January run, but I am now. And if we go down to the history here real quick, you can see on January 28th, the company, which refers to TD Ameritrade, and the other trading platforms restricted the trade of certain heavy shorted stocks such as GameStop, BlackBerry, AMC, COS, and Nokia. So right there, they already tell you a heavily shorted stock. So today, while being on my platform, I want to point out, and the reason why I think tomorrow is just going to be a fun day for all the AMC and GME stonks and gorillas out there, and lady gorillas, shout out to the gorilla gang, is right here at the top of my account. This popped up and said hard to borrow. And I'm like, uh-oh. That's what I want to see. Hard to borrow. So what is hard to borrow? Hard to borrow list refers to a list, i.e. an inventory record of securities that a brokerage firm are reluctant or cannot allow their clients to borrow for the purposes of short selling. Its purpose is to make transparent their list of the stocks that are hard to borrow, i.e. difficult to short sell. So that's good news, guys and gals. I mean, that's what we've been waiting for. They're all starting to shut it down. We all saw Webull remove some of the shorts that you were able to short on their mobile app for AMC and GME. They're still letting you short it for interest up to a few days ago, but I believe about 2 or 3 days ago they removed it. I don't see it on my app no more. So what makes it even more awesome is you have options expiring tomorrow, and those options are due next Wednesday by 9:30 a.m. So GME currently sitting at 200 plus, and there's 69,746,000 shares available to trade. Today's volume almost hit 11.8 million in trading, which was a 16.91% of available float to trade today, which that's higher than most stocks throughout the stock market. But for GME, that's awful low. The reason I believe it's low, there's no shares. They can't find any. The only shares they're trading are hedge funds back and forth trying to drive the price down, and they drive it back up. So, the only thing they're doing is selling to retail. I don't think retail retail's buying. I don't think retail's selling at all. And they are just not shorting it anymore. I believe it's that bad. So tomorrow, if the stock closes above 200, we're going to have 5 million shares due next Wednesday at 9:30, minus the Fed that delivers. And remember, a month ago, the February monthly options is also due the Fed to delivers at this time too. They do that for a reason, because they want the Fed to delivers to pay up, to clear the books. So that's why the monthly options are always, it helps us out. Also, if we're going to close over 250 tomorrow, which I do believe, in my personal opinion, we're going to have a nice run on GME tomorrow. We're going to close over 6 million shares due that following Wednesday. So we got a lot of good momentum building into tomorrow. With what I'm invested in GME, I'm invested 160 shares and around 134.12. So I'm in the green on this. I have been for a while. It was really nice when the stock was up over that 250 marker for a little bit. But that's the indication I get that we're definitely heading that direction. I just think the stock has been shorted to Dickens and back because there's just nobody selling their shares. And one of the things I do want to point out with GME is over here at Fintel, we have institutional shares at 95,301,000 and 136% of available shares that GME originally issued to institution. And what's weird, well, this number was 155%, but I didn't get a screenshot earlier this week. So I know if there's any other Fintel users out there, they've bought some of these shares, or some institutions sold off some of these shares, or the shorts have been covered. And what I mean by that, if we go back over to Excel, right there's our number for 95,301,000 per Fintel with 136.64, which means there were 69,746,416 shares originally issued by GME for institutional. We come over here to the public float, which is almost identical, 69,746,960. So that means there's 25,555,087 short shares just for the institutional, because the shares got to come from somewhere. So there are 25 million shares short just in institutional. So if we took the 25 million shares that they sold the institution off of the shares from the public, that only leaves 44 million shares available, no matter which way you look at it, because 25 million plus is already shorted to institution. So it's just math, and the math is showing that 44 million shares of GME is not a lot. So take it with what you think, but numbers don't lie, and this is exciting. So getting into AMC, back over to here. Here's our AMC. I want to show you that I have 2,849 shares. I'm at $9.28 a share, so I'm sitting very nice on that. We're sitting at the $14 strike. So going over to my Excel spreadsheet, we have 450 million shares available to trade, 122 million traded today plus, which was 27% of the float, which was a nice run here. But guys and girls, when the gamma squeeze starts, it's going to be over 150%, 200%. And then once it starts getting into the shorts or the short squeeze, it's going to go well over 300-400% in my mind. One of the things that I can say with AMC, which exciting, at $14 strike, we have 24 million shares due Wednesday morning at 9:30 a.m. next week. At $16, which I'm very comfortable that we should hit that $16 mark tomorrow by 4 o'clock. It might take till 4, but they have to be finished by 4 to have all those contracts, expirations, options finalized. And we'll be sitting at 32 million shares plus due next Wednesday at 9:30 a.m. And if we hit that $20 mark, and that's what we want to push for tomorrow, my AMC stonks, is we want 20, because 20 gives us a nice number of 38 million shares of AMC stock due Wednesday at 9:30. I also want you to remember for the GME and AMC, the 21-day failed to delivers from the February monthly options are also due this week. They do this on purpose to keep these hedge funds under control for failed to delivers. So when I say that we are rocking tomorrow, it is going to be fun. But one of the things I do want to point out is the beta. Beta is a very important number. And what is beta? Beta is indicates how volatile a stock price is comparison to the overall stock market. Greater than 1 indicates price swings more wildly, more volatile, and less than 1 indicates stock prices are less volatile in the overall market. So if we go to our GME, our beta is 0.54. So tomorrow, I think it's going to be volatile, but I think everyone was on GME a little earlier. So I don't know what to expect with GME tomorrow. I do expect great things. But AMC is what got me excited at a 2.103 beta. With the TD Ameritrade over here, we got the hard to borrow up here also, which tells me there is no shorts available to borrow. The hedge funds are out. So they only got their little ETFs and naked shorts they could deal with, but the TD Ameritrades, the Fidelities, the Charles Schwab, even Webull, they're shutting it all down. They know where this is going. TD Ameritrade's been around for 50 years. This is good stuff, people. Tomorrow is going to be fun. So with that, I'm going to wrap it up. If you have any questions, send me a message. I will tweet on Twitter tomorrow a couple things that I see during the day. I'll try to keep it short and sweet. With that, thank you and have a great day.